Good morning, Rick. The sun is shining, and I want to talk to you about money.
Sounds good, Sharon. How you doing?
I'm good. I'm good. Um, so there comes a question. We've been talking a bit about mortgages and the different types of mortgages.
Yeah.
Here's another one that I love my clients being informed about, especially if they are dealing with the big five banks, their own personal bank. Um, Often it's not even a question usually for them. They're usually told to just sign, 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 sign. And one of the things that happens is they end up signing for the insurances, and I'm not talking the CMHC, but I'm talking the life insurance and the disability insurance on the mortgage. And there's some pitfalls with that. I mean, if they end up wanting to sign that, I get sometimes that may be a good way to go, but there's a few pitfalls about that that I would love them to know about. Can you fill us in?
Certainly. Glad you asked that one, Sharon. So yeah, the mortgage life insurance that is offered by lenders is by no means ideal.
Mm,
Usually it's more expensive than just getting term life insurance if
right.
you go directly to the life insurance company.
Uh
And
huh.
of course, when you're getting the mortgage life insurance, it's tied to the mortgage.
Right.
So this is one of the biggest issues that I have with it is, well, in 5 years' time, if there's another company offering a better rate on your mortgage, assuming it's a 5-year term, of course, but whenever your term is up, if there's another company offering a better rate, you want the flexibility to be able to switch, right?
Right.
But what if your health has changed and you don't want to lose your life insurance?
Mm,
Well, if you got the mortgage life insurance from one of the big banks, if you don't have the mortgage there anymore, you no longer have your life insurance. So I've
right.
actually run into that situation with a client where when they first bought their house, they were healthy. And then I don't even think they switched banks. I think they just did a refinance or whatever. But yeah, they lost their insurance because they went through the questions and, I believe it was diabetes that they had. But they said no when they were taking insulin. And of course, insulin is a treatment for diabetes. So
Mm,
I think it would have been highly unlikely that the insurance would have paid out in that situation. And that's another issue is often, you're just asked the questions by the teller at the bank or, wherever you're getting, or maybe a mortgage agent's asking the questions. But most mortgage agents aren't trained to do life insurance.
mm,
I actually came in from the life insurance side into
yes.
becoming a mortgage agent. So uh, yeah, so I will use the mortgage life insurance just to get something in place. Because it's better, it's definitely better than nothing. Don't get me wrong. Um, but it's quick and easy to get in place. It's usually only 4 or 5 questions, but it's not even underwritten until time of claim, which basically means if it's life insurance, time of death. So of course, if there's a mistake on the application, it's when they're just qualifying you to pay the premiums. They qualify you to get the benefit when you've died. And, it's not a great situation where, and you can do Google searches on this and read about mortgage life insurance. There's lots of cases where, someone passes away and their widow or widower uh, ends up just getting a refund of the premiums that they've paid on the life insurance. So
Mm,
they often lose the house in that situation because, of course, they needed the income from that other party to make the payments.
right.
Now, when you get life insurance, it's all underwritten up front. You speak with a licensed insurance agent. Often there's a paramedical exam. It's much more in depth. And the thing that really gets me is it's cheaper. And one other thing, because I could talk about this, for
Right.
literally an hour,
Yeah.
but one other thing that I think is very important is you pay the same premium for the life of for as long as you've got your mortgage for the mortgage life insurance, yet you're covered for less and less. If something should happen to you 23, 24 years from now, and you owe like 10 grand or 20 grand on your home when you die, that's all
Yeah.
it's going to pay out.
That's
If you
right.
bought a $500,000 life insurance policy at the beginning, it's going to pay out the 500,000, assuming you still got it in force.
Right.
So,
Right.
and less money. Like, how
Yeah.
does it make sense to?
Yeah.
But that's the thing. It's like, oh, I'm looking at paying $2,500 a month on my mortgage payment. I'm not going to spend a lot of time thinking about the $50 a month on the life insurance. So
But you do need to. You do need to. You got to protect your family. You know, life
it,
happens,
it
and
can literally be the most important purchase you ever make.
yeah, yeah,
So,
exactly. Rick, thank you so much for that clarification.
my
Hope you
pleasure,
enjoy
Sharon.
the rest
Thank
of
you.
your day. Sharon Loduca, working hard to bring you home.
Rick Honeyford, Honey Financial.